Okay, so yes, hello, welcome to our webinar today on USDA programs. So I'm Ashley, I'm from the Dairy Grazing Apprenticeship, and I have two roles within DGA. The first is that I am project manager, so we have a series of grants. One is called the 2501, and that's where the funding for these programs is coming from. And the 2501 is kind of got an odd name, but the goal of that is to get all of our dairy grazing information available to underserved audiences. So with that, everything's being translated into Spanish, and our dairy grazing apprenticeship itself is also going to be available for Spanish speakers. So we are in 16 states. We just partnered in Oregon, and then really Minnesota, east through Maine, Missouri. So we're covering a big chunk of the country, providing education on dairy grazing. So what happens, we have mentor farmers that then are apprenticed or paired with an apprentice that's interested in learning more about dairy grazing. So they work through a roughly 2-year program to then become journey workers and hopefully, go out into the dairy industry, whether that's on their own farms, working in the industry, managing a farm, whatever that might be. But the apprenticeship is really fantastic in that it provides hands-on as well as classroom activities. So it's a really well-rounded program, and we're also expanding more into some research and education for another NRCS cooperative grant that's working with University of Missouri to help monitor forage growth and correlate that to some really exciting climate smart practices. So really we're doing a lot of things in grazing, but the focus is dairy and education. So thank you for having us, or thank you for joining us here today. And today's goal is to talk about USDA programs. And this may, I'll have to let our representatives talk about, of course, they'll talk about them. I don't know how much variation there is state to state. So maybe that's something we can talk about. But I'm going to start by turning it over to Lynette. And yeah. And please, for all questions, I'm going to be monitoring the chat box, but please hold your questions until the end of each presentation.
All right, thank you, Ashley. Hi, everyone. My name is Lynette Wright, and I am the Public Affairs and Outreach Specialist for USDA Farm Service Agency in New York State. But as far as Farm Service Agency programs go, I will say they are the same across the country. Everything is the same. There's just a couple of deadlines as far as like acreage reporting, and one of our programs I'm not actually going to get into too much today, called Non-Insured Crop Disaster Assistance Program. Those have different deadlines in different areas just based on growing seasons. But I'm going to go ahead and share my screen and get into the presentation. All right, can you confirm you're seeing that? I'm trying to get into presenting mode. Is it okay? There we go. I'm just gonna
look good.
Okay. Yeah, so as I said, I'm going to be covering FSA programs and loans today. So what is the Farm Service Agency? Obviously, we are part of the U.S. Department of Agriculture, and we are the agency, as we'll kind of cover today. USDA is a very large agency. There's about 17 different agencies within USDA. The two that are talking to you today are the two that deal mainly with farmers and production agriculture. So the Farm Service Agency implements agricultural policy, administers credit and loan programs, and manages conservation, disaster, and price support programs. So we operate out of USDA service centers. There are over 2,100 of these throughout the country. Like I said, I'm here in New York. So in New York, there's 39. And at all those locations, we are co-located with our sister agency, NRCS, our Natural Resources Conservation Service, who you'll also be hearing from. And then in about, at least in New York, there's also rural development is in about a quarter of those agencies. I'm not sure nationwide how many agencies they have, but here in New York, they have 10. So about a quarter of the, they just cover a wider range of counties. And to find your local office, you can go to www.farmers.gov. This is a great website that covers Farm Service Agency, NRCS, and also our other sister agency called Risk Management Agency, which is who administers crop insurance. So you can use that farmers.gov to find your local office. So FSA specifically is kind of broken into two sides. We have our farm loan programs and then our farm programs. And today I'm going to talk first about farm loan programs. So we like to call ourselves America's lender of first opportunity. FSA farm loans are designed to help farmers start, purchase, or expand their farming operation if they cannot get credit elsewhere. So if, right now it might be the interest rate is too high, or, to make it like plausible to make the loan work, or, for whatever reason, you can't get credit elsewhere. Maybe the down payment is too high. That's where we can come in, but we can't just compete with commercial banks if you're in good standing to get commercial credit. We have different types of loans depending on your current situation and what you need the loan for. And we have FSA loan officers available to help answer your questions and help you through the application process. And we do place special emphasis on providing loans to beginning farmers, as well as what we call targeted underserved farmers, which is a wide range of minority as well as women farmers. I put beginning farmer in blue there. So what we consider a beginning farmer isn't always who considers themselves a beginning farmer. For us, it's someone already farming, but hasn't been farming more than 10 years. Just some general eligibility rules and requirements for our farm loan programs. And these are just for our farm loan programs. They are different for our farm programs that we'll talk about in a minute. But you have to be a US citizen or qualifying non-citizen national. Applicant must be for profit, must have a legal capacity to incur debt, acceptable credit history, can't be delinquent on any federal debt, and this includes student loans, unable to get credit elsewhere, as we talked about. And in blue there, I have applicable training or experience in managing or operating a farm. And that training or experience is different with the different types of loans, and we'll talk about that as we go through our loans. So we do have direct farm loans. These are direct. It's not, if you're familiar with like SBA, Small Business Administration loans, these are different than those. These are loans directly from the government. It is taxpayer money. It's not just a guaranteed loan like SBA. So we have them for different types, different costs. So we have farm operating loans. These go up to $400,000 with terms of 1 to 7 years. For these, as far as the experience goes, you must have been participating in farming for at least a year. And things you can use with operating funds is the stuff it takes to keep your farm running day to day, month to month, year to year. So you can purchase livestock feed, seed, fertilizer, small equipment, rental fees. Perhaps you aren't in a position to buy land yet, but rental fees or leasing fees would be an eligible expense under our operating loans. And I should also add, our loans don't have any down payment. These are zero down loans. Then we also have farm ownership loans. So these are the loans, to buy the farm, to do major construction. So these loans go up to $600,000 with terms up to 40 years. But for these, we do require that you must have participated in farming for at least 3 years out of the last 10. And we can substitute, we can substitute 1, maybe even 2 years for education or military experience. But the participated in farming means you didn't just work on a farm, but you helped make management decisions. So on a farm, you said, we're going to dry this cow off today. We're going to, breed this cow today. We're going to, move this paddock, move to this paddock today. You weren't just being told what to do, but you helped make those management decisions. Then we also have our microloan program. And these are, again, for those operating and ownership expenses we just went over, but these are for $50,000 or less. And because it's less money, it's a simplified application process. So there's less paperwork, less verification requirements, less experience requirements as well for the operating loans. So when it comes to buying land, when it comes to the ownership funds, we still have to require that 3 years of experience. But an operating loan, to rent for, rental fees, lease fees, buying livestock, those operating expenses, we can do a microloan with no experience. You can just have a mentor that will help you through the process. And since you guys are in an apprenticeship program, hopefully the experience requirement won't be a big hurdle. But for those microloans, we can do those. We have the most wiggle room on our experience requirement with the operating loans for $50,000 or less. Just a couple other loan options I'll mention. We also have a joint financing program. So maybe you go to a commercial bank and they will, give you a loan at a good rate, but you don't have the down payment that's required for it. You can come to us and get a loan for the down payment, and that loan will be at 2.5% interest. And then we also just wanted to briefly mention we have youth loans. So these are for kids that are 10 but not yet 21. They go up to $5,000, but they can be, a little bit of money as well. It doesn't matter. There's no minimum. They are for money-making ag-related projects, which sometimes I grew up on a dairy farm, so I know sometimes, raising a dairy, sometimes the most expensive calf at or most expensive animal at a dairy sale can be, the baby calves. But it is, a money-making experience. And they do need to have an adult mentor, like an FFA advisor or a 4-H leader. So what is needed to apply for a direct loan? You need to know your business structure, whether you're going to be sole proprietor or an LLC. We need to know the type of operation. We need to know your education, training, and farm experience. You need to have a business plan. It doesn't have to be, a huge 100-page document, but you need to have a plan of what you're going to do and how you're going to make money so you can pay the loan back. We need to know the amount and purpose of the loan and any financial and production data that you have, as well as, there's other things depending on what the loan is for that may come into play. Our lending is what we like to call progression lending. So you do have to keep records, and your financial information will be required at least annually. We might require you to take some borrower training, depending, hopefully, like if you're in a great program like DGA, that training might already be built in. But if not, we might say, oh, you should take a QuickBooks course or some course, wherever the loan official feels you could use some training. Our goal is always for the applicants to graduate to commercial credit. And then we do have to follow environmental compliance. So this must be done before any ground is disturbed. And this ensures protections of environmentally sensitive land and wildlife. These are our interest rates for December 23. They're going up like all the others, but they are still, lower than you're going to find at a commercial bank. But again, they are for people who can't get credit elsewhere. So just because these interest rates look good doesn't necessarily mean we can, work with you if you're in a good financial spot. But those are the current interest rates. Real quick, any questions? Oh, one more loan I'll talk about. So we do also have a guaranteed loan program. So this is where FSA is guaranteeing loans made by banks to farmers to help producers obtain credit from commercial sources. So in this case, the bank is FSA's client and the farmer is the bank's client. The loan is made at the bank's rates and terms. And FSA, we can generally guarantee 90% of the loan with a maximum of just over $2 million now. So these are different than the other. These, obviously are not direct loans from the government. So your commercial bank might say, I want to work with you, but we're just gonna, get a guarantee from FSA to take a little risk away for us. Ashley, are there any questions about the loan so far, or should I move on to programs? All right, I'm going to keep going. So we have our other side is the farm program side. And I should mention the farm programs are available in all 2,100 offices that I mentioned across the country. Our farm loans, at least here in New York, we operate out of hubs, and then those hubs cover 3 to 10 counties. So when you find your local office, they might, if it's for a farm loan, they might connect you to a different office just because of that. But the farm programs, like I said, are available in all of our offices. So in our farm programs break down into kind of four categories. There's price support programs, disaster programs, conservation programs, and then the compliance and eligibility that goes along with these. We have a lot of programs. I'm not going to cover them all today. But if you have a diversified operation, definitely, check in with your local office, because there's things, today I'm going to focus on what dairy and grazing operations can take advantage of. But like I said, if you're diversified, you might want to check what else we could offer your farm. So the first program I will talk about is very timely, because the deadline is this Friday, December 9th, for 2023 coverage. So this is our Dairy Margin Coverage Program, or DMC. DMC is a voluntary program that provides dairy operations with risk management coverage that will pay producers when the difference, or the margin, between the national price of milk and the average cost of feed falls below a certain level selected by the program participant. And like I said, if you're currently farming and your farm doesn't take advantage of this, or the farm you're apprenticing on, you might want to just double check, like, hey, are you signed up for DMC? Because the deadline is this Friday, the 9th. So what is the margin? The margin is the actual dairy production margin. The actual dairy production margin is the difference between the all milk price and the average feed cost. So for example, if the all milk price for a month is $20 a hundredweight, and the calculated average feed cost for the same month is $12 per hundredweight, the actual dairy production margin is $8 a hundredweight. So DMC has different coverage levels. There's what we call catastrophic coverage, which is at $4. The margin you would get paid at is when it's $4. And so this is essentially free, besides a $100 administration fee. And we can waive that fee if you're a beginning farmer, woman, minority. So there are different, those underserved targeted communities. We can waive that $100 admin fee. Then we have tier 1, which is for the first 5 million pounds of milk. So we would get your production history if you're not currently enrolled. Your production history would be based off of 2019 production for the year. So the first 5 million pounds of coverage can be covered. You can get coverage. You can select from either $4 up to $9.50 for the margin. And then tier 2 is production over 5 million pounds in a year. And that goes up to $8. And operations may annually elect to receive coverage on a percentage of their operations production history from 5% to 95% in 5% increments. And so that tier 2, I'm not sure how large dairy grazing might get into, if you're going to get into that tier 2 where you're making over 5 million pounds in a year. But if tier 1 has been selected for 4 through 8, then tier 2 will automatically be at the same tier. But if tier 1 was selected from $8.50 to $9.50, then tier 2 may be any value between $4 and $8. And here's the premium costs on those tiers. So you'll see tier 1 is very cost effective, very, worth taking advantage of, if you ask me. Pretty cheap coverage for that tier 1, which is, 5 million pounds or less. And then tier 2 is a little bit more expensive. But again, that's if you're over 5 million pounds of milk for the year. Just a couple other things. You have to have production history established. So if you don't have that, we can set you up for that. It would be based, I believe, now on 2019. But if you're already in the system, it might not. We'll get to that. You have to register during the election period, which, like I said, is this Friday. You have to pay the $100 administration fee if applicable. So like I said, women, beginning farmers, and minorities can have that fee waived. And you have to select your coverage for tier 1 as well as tier 2 if applicable, and then your coverage level, how much of your production history you want to cover. And I'll just mention we have supplemental DMC. So this started last year, and it allows operations with production history of less than 5 million pounds to update their history using 2019 milk marketings if it had increased. And if an operation didn't take advantage of that in 2022, which is when it was started, they can do it now for 2023 coverage. And we can't really tell you, to do this or not, but definitely if you aren't, if you haven't signed up yet, talk with your milk co-op and they'll, there's projections that do show this should make a payment. So ask around about that. Next, I'll go into our farm storage facility loans. So although this program has the word loans in it, it is a program, so it has different eligibility requirements than the loans I talked about previously. So these loans are low interest financing to build or upgrade permanent or portable storage facilities and equipment. But unlike the farm loan programs I previously talked about, these are eligible to any producer of an eligible commodity, even if they can get credit elsewhere. Here's a list of the eligible commodities. As you can see right at the top, milk, as well as butter, cheese, and yogurt are eligible, as well as hay and forage. And then I listed them all, like again, in case you're a diversified operation and you have multiple streams of income. So a couple of the uses, and this is not a complete list, but just some uses that we thought of as far as dairy operations and grazing. We can do milk bulk tanks and silos, including the facility that houses the tank. We can do hay storage, including pole barns. And then we can also do equipment for hay. And you don't have to, get a barn to also be able to buy the equipment. So we can do bale wrappers, hay wagons, skid steers. We can also do concrete pads for ag bags, as well as ag baggers, the equipment itself that bags the silage. We can do silage bunks. We can do hauling trucks, including refrigerated trucks, as well as refrigeration units and freezers, again, in case you're diversified and maybe you're selling meat as well and need some freezer space. A couple of the requirements for farm storage facility loans, you do have to demonstrate the need for additional storage, but sometimes, so for instance, on a dairy, perhaps your current tank only holds enough to hold 1 day of production. If you can get a bigger tank that can hold 2 days of production, and save you on hauling costs, that would be a need. That would demonstrate the need for additional storage. These loans do go up to $500,000, but you can make multiple requests if, whatever you wanted to do was going to cost more than that. But these loans do have a down payment. So for loans that are over $50,000, the down payment is 15%. And for loans under $50,000, the down payment is 5%. And these loans also have environmental compliance. And here are the current interest rates. They have been ticking up, obviously, but they're still, the cheapest money you're going to find, I think. And it is a fixed for the life of the loan, and it's a yearly payment schedule. I'm not going to go into our disaster programs too much. The main takeaway is if damaging weather affects your farm, call your local FSA office. But yeah, like I said, I'm not going to get too deep into these. At least here in New York, they don't get triggered all that often for the livestock, but they could potentially, especially in drought. The last program I'm going to cover is our Conservation Reserve Program, or CRP. And this is a land conservation program. In exchange for a yearly rental payment, farmers enroll to agree to preserve environmentally sensitive land in ways that will improve the environmental health and quality. And these contracts are for 10 to 15 years. So our Conservation Reserve Program kind of breaks down into 4 different groups. So we have continuous sign up, so there is no deadline on this. And this program is how you can install, riparian forest buffers, filter strips, wetland restoration. We can do fencing to keep livestock out of water. We can do stream crossings if, now we've got a fence keeping the animals out of that water, and water facilities to get water to your livestock. Then we also have the Conservation Reserve Enhancement Program. So that's everything I just said in the continuous sign up. It just has an enhanced payment in specific parts of the country. Here in New York, we have a lot of CRP or CREP, what we call CREP, Conservation Reserve Enhancement Program. But you just want to check with your local office to see if you are in that CREP area, or would just, it's still a great program either way, but if you are in CREP, you would get an enhanced payment, like I said. Then we also have general CRP. That sign up has not been announced yet for 2023, but it takes hold field practices. It usually takes them out of production, so environmentally sensitive land is not farmed, but instead devoted to conservation benefits. And then the one that we're going to talk about the most is our grassland CRP. And again, the 2023 sign up hasn't been announced, and there's certain details that haven't, we don't know the details, the complete details for 2023 yet, but I'm going to go over what we've had last year for the most part, and we don't, expect them to change too much. But grassland CRP is a production practice that enables producers to graze and hay the land and employ maintenance practices that will enhance and maintain the viability of the grassland cover. And we do this because it emphasizes support for grazing operations, plant and animal biodiversity, and eligible land containing grasses, shrubs, and forbs under the greatest threat of conversion. The Grassland CRP program is Working Lands program. Working Lands conservation programs help farmers to enhance the sustainability of their operations while keeping land in production. So some of the differences, if you've heard about our general CRP, some of the differences is we don't require a cropping history for grassland CRP. Haying and or grazing of harvesting seed for seed production, is allowed. There's an asterisk there. There's some parts of the country where it is, there's some birds that are protected. So we do restrict activities by primary nesting season of birds in some counties. But you just want to check with your local office if you're in that area. It is a production-based program, and will pay cost share for fencing and livestock water development and systems as determined by NRCS, who you'll hear from in a minute. Grassland CRP allows for production practices, haying, mowing, and harvesting of seed subject to nesting season. Those state grassland zones. And like I said, those are, again, they haven't been established yet for 2023, I don't believe even. So like your local office might not know yet if they're in 2023 grassland zone, but they could tell you if they were for 2022. It allows for maintaining existing cover to remain a working land program. It's suitable to be hay or grazed and grazing related activities. So the grassland CRP rental payments are based on 75% of NASS, which is the another agency under USDA, the National Ag Statistics Service. They're who are doing the census right now. Sign up, I'll just put a little plug in, fill out your census. So it's based on 75% of NASS grassland pasture rental rate. So these vary by county. It's a minimum of $13 an acre, and it includes climate smart practice incentives, and it's paid annually for each year of the contract. And so these climate smart practice incentives so last year FSA provided an incentive for CR practices that increased carbon sequestration and reduced greenhouse gas emissions, and based on the estimate benefits of each practice. And grassland CRP has a climate smart incentive of 5% added to the NASS rental rate. And then some of the cost share practices that grassland CRP can authorize, and these are determined by NRCS. So NRCS will do a conservation plan, and if they say, we need to do such and such, we can't just say like, I want internal fencing if NRCS doesn't say that that's a need. But the authorized cost share practices are internal fencing needed to facilitate a livestock grazing system, ponds, wells, and spring developments or pipelines and water facilities, brush management, and livestock trails and walkways. Eligibility, you do need to have owned or operated the land for at least 12 months prior to the closing of the CRP enrollment. The land must be located in an area historically dominated by grasslands and currently be planted to a grass cover, and it can have no more than a 5% tree canopy, so no silvo pasture with this. And it is a competitive process. So we don't have the 2023 ranking factors yet, but just because you put an offer in with your local office doesn't necessarily mean you're going to get the contract. It's ranked nationally, and then those are awarded out. Just wanted to mention that everything I've talked about can be utilized by organic farmers. And then we also have a couple of cost share programs for organic farmers. We have the Organic Certification Cost Share Program. So this reimburses producers a portion of their paid certification costs. And then we also have the Organic and Transitional Education and Certification Program. And this also reimburses producers some certification costs, as well as transition costs are included in that transitional education program. To participate in most of these programs, you need to crop report. So participating with FSA, you need to do an acreage report, which is just a record of the crops on a farm for the year. The crop report is filed annually. Acreage reports provide information necessary for eligibility for current or future USDA programs. It's for history purposes, and it also helps inform USDA, about future program decisions, so that they know what's being grown out there in the country. So like this is one thing that is different across the country. So here in New York, these are the crop reporting deadlines, but they might be a little different in your state. The big one is always that July 15th is corn, soybeans, spring planted small grains, and most other crops, as well as CRP for general and cover crops. So that's usually the big one, but there are deadlines throughout the year. And how to work with USDA, as I said before, you find your local office on farmers.gov, call them to make an appointment. You can just stop in, during COVID, it was a little tricky, but at least here in New York, our offices are all open. So you can just stop in, but it's always best to call and make an appointment so that you know for sure there's going to be someone there that's going to have time to work with you and isn't going to be with another producer. And you will register your farm and get a farm number. And you'll need that farm number for USDA program or for FSA programs, as well as NRCS, which will be going next. So you'll need to bring proof of identity, depending on if you're a business entity, you might need a EIN number, but at least your driver's license, social security card. You do need to have proof of ownership or leases, or leases, and any entity identification status documents. So registering your farm with FSA, we will work with you one-on-one to review your documents and register your farm. Registering your farm allows you to apply for FSA programs as well as other USDA programs like NRCS. And after we determine your eligibility to participate in FSA programs and loans, we walk you through the application process, and more information may be needed depending on the program you're applying to. I did want to, have you, especially if that grassland sounded interesting, definitely want you to sign up for our Gov delivery alerts. If you go to www.farmers.gov/subscribe, you can sign up to get a monthly newsletter from your local county office, and that'll keep you up to date when programs are announced or deadlines are approaching. But programs announcements like grasslands, which hopefully you'll want to keep an eye out for. And if you're interested in learning more, again, check in with your local office and see what programs your farm can take advantage of. Are there any questions out there?
This is Adam Jones. I got a question. Maybe it was already answered, but is this presentation was amazing. It was pretty much everything I had questions about were answered. But is this are these slides available somewhere? I think this is being recorded, but is just the PowerPoint available?
Yeah, I can make a PDF of it and send that to Ashley.
Perfect.
And we did have your question in the chat box. Do we need a property in mind when beginning to look for lending, or like a home, can you get pre-qualified for a certain amount?
That's a good question. So right now our loans you do need to have a property in mind. We don't do any, kind of pre-authorization. So that is something you do need to know the farm you're wanting to buy. And I just, warning you, it is, you're getting money from the government, so it's not a quick process. So, it can take a couple of months. So just, be prepared for that.
Okay, so just kind of a follow-up, it wouldn't be something then to like go into a farm auction and anticipating being able to be that's not something there.
No, you could double check with your local office. But yeah, you need to, your business plan needs to be at this point, and we're trying to make our loan application a little more streamlined. But at this point, you do still need to know, your business plan needs to be specifically tailored to the farm you're trying to buy. So.
Okay. And then for the leases or like renting, because that's probably a little less competitive. Farms are just selling pretty quick and fast. So even if you have one in mind, I was just worried about, not getting it done or whatever. But for the renting, that kind of the same process. If you have the agreement, but you need the rental, or like you need the micro loan to say get started with the renting, or do you have to find financing to get the down payment lease or like to start the lease, or can you just have the agreement and then bring that agreement in as proof that you're going to go forward with the farming on that piece or whatever?
So I'm not a loan official myself. And I don't have a loan official on here. I would say that you just need to have the agreement, and then we could, go forward with the loan, but just double check with your local office on that. But yeah, if you have the agreement, that should be good. But that is, sometimes that can be the trouble with leasing and renting is, getting an actual like on paper contract, which we do need.
Okay. Thank you.
Yep.
All right, I don't see anything else in the chat box. So if there's no further questions, we can move on to NRCS. Thank you. This was really fantastic.
Good morning, all. It's a pleasure to be here with you all today. And my name is Charlotte Hancock. I am the Agriculture Management Assistant, Environmental Quality and Systems Program, State Program Manager, located in Syracuse, New York. Let me share my screen. Can you all see my screen?
I can, yes.
Okay. I'm having some difficulties. Hold on one second. Sorry about that.
That's looking good.
Okay, great. Thank you. I'm learning Zoom right now. Sorry about that. So today I'll be discussing the Farm Bill and Conservation Programs, financial assistance process. Next, I'll be discussing the Conservation Stewardship Program, environmental quality and systems programs, and sharing USDA links at the end of my presentation. What is Farm Bill and Conservation Programs? NRCS offers financial and technical assistance through conservation practices, activities, and enhancements to help agriculture producers make and maintain improvements on their land. How does financial assistance application process for NRCS programs works? NRCS accepts applications on a continuous basis. After NRCS planners receive the applications, they will begin to work with the applicant to identify resource concerns that assist in clients' objectives. NRCS planners will assist the applicant to develop the alternatives to address or improve the resource concerns identified. Once NRCS planners have assisted the applicant in identifying the resource concerns, the application will be assessed and ranked to be considered for funding. If the applicant is selected for funding, the applicant will sign the contract to implement all the practices they help choose to treat the resource concerns. To receive assistance from NRCS for farms, ranches, and forests, NRCS will recommend you to stop by your local NRCS field office. NRCS planners will discuss your goals and objectives for your land. Second, once the application is received, NRCS will walk you through the application process for financial assistance programs. And as part of the application process, NRCS planners will check to see if you're eligible, which you'll need to bring in an official tax ID, which can be your social security number or your business ID number, and a property deed or lease agreement to show you'll have control of the property. NRCS will take a look at your application and rank them according to the local resource concerns, the amount of conservation benefits the work will provide, and the needs of the applicant. And lastly, if you are selected for funding, you can choose whether to sign the contract for the work to be done. Once the contract is signed, you'll be provided standards and specifications for completing the practice or practices. Then you'll have an amount of time to implement these practices. Once the work is implemented and inspected by NRCS, the applicant will be paid the rate of compensation for the work if it meets NRCS standards and specifications. What is CSP, Conservation Stewardship Program? What is the purpose of CSP? It's to encourage participants to address priority resource concerns and improve and conserve the quality and condition of natural resources by maintaining a baseline of good conservation practices and adopting additional conservation activities. It's for agricultural land and forestry. The contract within CSP is for 5 years, and participants can earn payments annually for conservation practices. So for conservation performance, the higher the performance, the higher the payment. Applicants must meet the stewardship threshold for at least 2 resource concerns on all land uses when they apply. They must also agree to meet or exceed the stewardship threshold for at least 1 additional resource concern by the end of the contract. Producers must have an effective control of land for the entire 5-year contract period. Who's eligible for CSP? It can be an individual, legal entities, joint operations, or Indian tribes, historically underserved farmers, which includes beginner farmers, veterans, social disadvantage, or urban farmers. What's considered as an eligible land throughout CSP, a private and tribal land, agricultural land, cropland, grassland, pasture land, and non-industrial private forest land. CSP payments are in two parts. The first is the stewardship annual payment for the existing conditions. Half of that is based upon the resource concerns already met at time of the application. The other half is based upon the number of acres enrolled per land use. And the second part of the payment is for the participant agrees to go above and beyond that March stewardship. And payments are capped at $200,000 over the life of the 5-year contract. Payment scenarios and CSP are for some practices to do and contain small scale performance rates, though to better reflect the cost of doing practices at the smaller level. And here are a list of the CSP commonly used enhancement practices. And these practices that are listed can be used through your grazing plan. What is EQIP? Environmental Quality and Stewardship Programs is to provide financial and technical assistance to address natural resource concerns and deliver environmental benefits such as improved water and air quality, conserve ground and surface water, reduce soil erosion and sedimentation, and improve or create wildlife habitat. What's considered as EQIP eligibility? Who's eligible? Farmers, ranchers, forest landowners, all types of agricultural operations, livestock operations, historically underserved farmers, and urban farmers. What's included in the EQIP is develop a conservation plan, short-term contracts, and cost share provided for practices that includes conservation plans. And here are a list of the EQIP commonly used conservation practices for grazing, fence, forage, and biomass planting, livestock watering facility, livestock pipeline, and soil management. What's considered as the payment limitation in EQIP per Farm Bill, a person or legal entity may not exceed a payment of $450,000. And Indian tribes or Alaska Natives corporations are excluded from payment limitations. And then here are a list of USDA links if you need additional information or assistance. Again, here are lists of the links for you all. And then if you have any questions or need additional assistance, please feel free to contact New York programs staff for assistance. Thank you all. Are there any questions?
So if we have some people that are outside of New York, I was gonna ask if I could go back and look at those links. Would they be able to get information on their state as well by going to any of those?
Yes, ma'am.
Okay, great.
And I can share my presentation with you, Ashley, to provide to the participants.
That would be great. Thank you.
No problem.
All right, any questions for Charlene? All right, well, that was fantastic. I'm learning a ton also, so thank you so much. And we'll move on to our last presenter, Karen, and she's from NRCS, and I'll let you take that away, Karen.
Great. Thank you, Ashley. Just to quickly introduce myself, I'm Karen Hoffman, and I am the state animal science and grazing specialist here in New York. Most states have a state grazing specialist, so whatever state you happen to be in, there's somebody there that would be have the same kind of a role as I have. So I am going to go ahead and share my screen. And can you guys see that?
Yes, we can.
Okay, great. I'm using 2 monitors, so sometimes it gets a little confusing. All right, so I am just quickly going to go through the conservation practices that we have with NRCS that would be applicable to dairy.
So Karen, you're still in the presenter mode with the next slide visible on the right.
Okay, so let me try this again. How's that?
So I see your slides, but it's in like the edit kind of mode.
Okay. Gosh. Last try.
All right, perfect.
Okay.
That's great.
All right, great. So one of the things that Charlene mentioned was that for any of our programs in NRCS, you have to have resource concerns. And so I just wanted to quickly go over what those resource concerns are. We have what we call SWAPA plus H plus E, which stands for soil, water, air, plants, animals, plus humans, plus energy. So things like soil erosion, soil health, water quality, air quality, plant condition and plant health, all of those things are what we consider resource concerns. So our field staff would come out and meet with you and look at what's going on your farm to see if there are any resource concerns related to these SWAPA factors. And typically with grazing, we're going to be looking mostly at soil, water, and plants. While we're out there, we have tools that help to assess what the current condition of those things are and whether or not there are resource concerns present on your farm. So it's a pretty simple process. I don't want to get into it too deep because we don't have a lot of time left here today. But just keep in mind that, as you're looking at your farm, to be looking at, okay, do I have soil erosion happening, or are my plants not healthy, or those kinds of things. So the dairy related practices, this is just a list that I came up with just off the top of my head based on, all the different things that we do. Prescribed grazing, fence, animal trails and walkways, watering facility, livestock pipeline. Lynette mentioned a couple of those: pasture and hay planting, forage harvest management, conservation crop rotation, and cover crop. This is just sort of a snapshot view. There's some other things that would also be related that your local office might say, hey, you also need to do such and such type of a practice. But this is just to give you an idea of what's available. A little bit more specifically, prescribed grazing is just a term that we use in NRCS. Those of you that are doing the dairy grazing apprenticeship, you may have talked about managed grazing or mob grazing or rest rotation grazing. There's a lot of different terms out there. Prescribed grazing is the one that we use. And basically, if you sign up for this practice, what you get at the end is a grazing plan that's customized to your farm. So it's a prescription because it is specific to your farm. And what you'll get out of that is a plan map with aerial photos that shows, where different components like fence and the laneways would, best be planned. This is all based on what you want to do and how you want to set it up as well. They'll tell you your paddock sizes, you know, how many acres you need total, all of those kinds of things. So if you're also looking at being certified organic, you can use the prescribed grazing plan as part of your OSP. And so it's a great way to get that taken care of if you're certified organic. In terms of fence, typically we're looking at electrified fence, usually a high tensile fence. We do have a standard and we have specifications for how that fence has to be built. One of the things to keep in mind is that we don't always provide financial assistance for perimeter fence. It depends on the program you're signing up for, and it also depends on the current land use. There's some other factors, but we do have a lot of people who, you know, will call our field offices and say, hey, I want to sign up for that fence program. It's really not a fence program. It's just a practice that is available if it needs, you know, if your plan needs to have fence included. Animal trails and walkways, essentially this is the laneways for your dairy cows to travel from the barn after milking out to pasture and then back in for the next milking. Watering facility, this is to develop a water trough, multiple water troughs in multiple locations. They can be either permanent or portable, depending upon the program again and the state that you're in. And then the livestock pipeline is simply the distribution network to supply the water troughs. And there's some other practices that might go along with the watering facility and the pipeline, such as a well, a pumping plant, a pond, a spring development, those kinds of things. But again, those are very site-specific practices that your local field office might say, you know, would work well on your farm. So anyway, some other practices that we have, pasture and hay planting. This could be if you need to reseed a pasture or even a hay field. You know, if you're looking at improving your hay fields because you've got a resource concern there. Forage harvest management is a standard that we use to help you improve your forage quality for your stored forages. Conservation crop rotation is a practice that we would use where you have annually planted crops. So if you're growing corn silage, you know, you might want to rotate your corn silage ground with your hay ground on a set schedule as a way to improve soil health, reduce soil erosion. You know, there's lots of other benefits of rotating your crops. And then the cover crops, you know, you probably would be planting those in the fall. Then you can harvest or graze them in the spring on any of your annual crop ground. That also helps to, you know, maintain soil health, reduce soil erosion, improve water quality. It has lots of other conservation benefits. So those are just some other practices that might be applicable in a dairy situation. You can find all of our practices in our field office technical guide, what we call FOTG. I've got the link here. And just when you get to that page, you have to pick your state, whether it's New York or Wisconsin or Michigan or whatever. And that will bring up something that looks like this. You would click on the practice standards and supporting documents. And then under that, you would get a drop down for the conservation practice standards and support documents. And you can look at the whole list of practices that we have on this FOTG. And the states are all pretty similar in what they offer, but every once in a while, a state will have a practice that is what we call an interim standard, which means it's being tested. So if you sign up for that, you can be part of like the test of this new practice that we might be offering in the future. So that's kind of a neat opportunity. Also, if a practice doesn't really apply in a state, they don't necessarily offer that practice. So, you know, there's a little bit of difference state to state, but most of them are the same. So anyway, with that, I can open it up to questions. This is my contact information down at the bottom if people want to write that down quickly, or I can also send a PDF of this to Ashley.
Yeah, that would be great to have all these presentations.
Okay.
All right, any questions for Karen? What a perfect hour too. So yeah, if there's no questions, I can let you guys go, and I will follow up with a recording of this video, of this presentation, as well as the presentations themselves, and then we'll get this translated and posted on our website also. Well, thank you, USDA folks, for joining us and giving us such a thorough explanation. And if there's no questions, I'll end the meeting and hopefully see you all again soon. And please reach out to DGA as well if we can help you with any dairy grazing.
And Ashley, I just wanted to thank you for asking us to present, because it's always a great opportunity to let people know that we have all these wonderful opportunities with USDA, especially for young and beginning farmers. So.
No, yeah, thank you guys. All right, well, have a great day, guys, everybody, and I'll hopefully run into you all soon.